guys, it's Carter. Welcome back to the team. Hope you guys are all having a great and amazing day today. Now in today's video, we are going to be talking about how to invest $500 into the stock market in 2024. So this is going to be a beginner's guide of what I would recommend doing going into the new year. So hope you guys all enjoy it. If you guys do, hit that like button and subscribe. For those of you that don't know who I am, my name is Carter, and what we talk about on this channel is stocks, money management, trading, investing. So subscribe and join the team. Also, if you guys want to learn more about trading in the stock market, I just released a brand new swing trading course where we talk about my strategy, how I find stock, and we're doing a Black Friday sale, so check it out. I'll put it down below. So guys, let's dive into this. I hope you guys enjoy it. So one of the main reasons I wanted to make this video is because I always think it's smart to go into the new year with some sort of game plan or strategy so we can all make as much money as possible. So what would you do with $500? Now, the first thing that I would recommend doing is having a broker that meets your needs. There is a huge difference between investing and trading, and a lot of people don't realize this. Now, if you're investing, you're not gonna look at any of the stocks or investments for at least 2 to 5 years. And investing is long-term growth, long-term. If you're trading, on the other hand, and you're constantly buying and selling, you're gonna have different brokers. So the broker that I would recommend for trading is gonna be Moomoo. This one here is designed for traders. And if you're a long-term investor, I would recommend using Fidelity, Robinhood, or even TD Ameritrade. The biggest things you want are retirement accounts, and you want a broker that is very, very easy to use and offers a variety of services like fraction shares, DRIP, which is dividend reinvesting, and we'll talk about all these later. But the biggest thing is just having fraction shares, because starting out with less than $1,000, you want to make sure that you can really capitalize and use all of your money to invest, rather than just only using a little bit of it. In fraction shares, you can invest certain dollar amounts and you can get like fraction shares. All right, now that we understand the broker to use, what else should I do with my broker? The next thing I would recommend doing is having your DRIP settings turned on. The reason why is DRIP stands for dividend reinvesting. What this means is all the dividends you get, you want to reinvest back into the companies. And the reason why is, look at this chart right here. This shows a clear example of reinvesting your dividends and not reinvesting your dividends. So if you care about long-term growth, I would highly recommend turning this on, where you can start that snowball effect and compound interest. Now it's time to figure out where to invest this $500. All right, so the first thing that I would recommend doing is investing 80% of my money. I know it's a lot, but I would invest 80% of my money into the S&P 500. And the reason why this is so incredibly important is the S&P 500 over the past 90 years, through all the ups, through all the downs, the Great Depression, the dot-com bubble, the 2008 crash, has had an average return rate of about 10%. So if you're just a long-term investor, 10% is going to be absolutely fantastic, and you're going to be getting dividends that will pay you passive income. It's literally a great way to get long-term growth with very, very little maintenance. Now, the ETFs and index funds that offer the S&P 500 are SPY, VOO, all those. They're absolutely fantastic, and honestly, just pick one that you like better, because they virtually have all the same holdings in it. And the reason why this is my number one and why I'm so heavy on it is because this is so important for long-term growth. The S&P 500 is an index, so a lot of hedge funds try to beat it, and the craziest thing is these so-called professionals, about 87% of massive hedge funds can't even beat the S&P 500, which is incredible. So these full-time people that actively look to find the next Apple, the next Tesla, these people can't even beat the S&P. So it's just better to just invest in the S&P, get long-term growth, and just sit back, relax, and enjoy the show. Now, with another 10%, what I would invest into is blue chip dividend stocks. Now, the reason why I absolutely love investing into dividend stocks like Coca-Cola, Home Depot, Lowe's, Costco, all these massive companies, is because it's so important to me, one, be diversified. So you're investing into a variety of things. Not to mention, you want dividends. Dividends are a great way to get passive income that can slowly compound over the years, and before you know it, they could be paying your mortgage, a car payment, which is great. And another reason why investing into like dividend stocks are so important is because dividend stocks historically, during recessions or crashes, they don't crash as much, or they don't fall as much. much. And the reason why this is because people are more likely to hold a stock that's paying them cash flow rather than a stock that's not. So some good examples of some great dividend stocks and blue chip stocks that I absolutely love, like we already mentioned, Coca-Cola, Johnson & Johnson, Home Depot, Lowe's, all of these massive companies pay great dividends, and you guys could even look at Dividend Kings and Dividend Aristocrats, which are great dividend stocks as well. Here's a full list of a bunch of them. All right, now that we have about 90% of our money invested, where should I invest the remaining 10%? With the remaining 10%, where I would invest is into a variety of fantastic growth stocks. This is where you guys can have fun. This is where you guys could try to find that next Tesla, that next Apple. You're going to be investing into growth stocks. Growth stocks historically are a little more volatile, have a little more risk, but often higher reward. Like the companies we already mentioned, these are going to be companies like Tesla, Palantir, Nvidia, AMD, all these massive companies that have had rapid growth, but also they're volatile, meaning they're going to be going up and down at rapid rates. This is where you guys can have fun, find those stocks that you want to possibly trade or, have a good time with. Now that you have a well-balanced portfolio, I think it's smart to always find the next up-and-coming stocks, especially being younger. Obviously, if you're getting a little older, getting near retirement, I would still recommend investing most of my money into the S&P or even some bonds or some blue chip stocks just to get your portfolio a little well-balanced, suited for retirement, because you could invest a bunch of money in the growth stocks and they could be a little risky and a little volatile, and your portfolio could go down a little bit. And if you're going on retirement where you're possibly taking money out, that's not the best idea. If you're getting to retirement, I would recommend investing more money in the S&P or blue chip stocks, but obviously adjust it to whatever meets your needs. But if you're young like me, you still have a lot more time on your hands where you can make mistakes and possibly make that money back. So I think it's smart to invest in the growth stocks like Tesla, Palantir, AMD, Nvidia, all these companies that have a ton of long-term potential but are risky. So guys, this is what I would recommend doing if you guys have $500, $100, or even $10 to invest. I think it always is smart to have it suited for percentages, so you can just put that to your criteria. So if you guys have like $100, you can invest $80 into the S&P, $10 into dividend stocks, and another $10 in the growth stocks. So guys, I hope you guys all enjoyed this video. If you guys did, hit that like button, subscribe, and we'll see you guys tomorrow in another episode. Remember to hit that like button. Guys, don't forget to check out my trading course where you guys can learn how to trade and how to buy low, sell high, all that good stuff. I'll put it down below. Check it out. So guys, we'll see you guys later. Hit that like button, subscribe, and bye-bye. See you tomorrow.